Dear participants, welcome to Storent Holding Investor webinar. We will start with company's presentation, followed by live Q&A session. If you would like to ask your question to the company, please use the Q&A box at the bottom of your screen. For your convenience, we are recording this session and replay will be available shortly after the call. That being said, I'm turning the call over to our hosts, Andris Pavlovs, co-founder of Storent and chairman of the board of Storent Holding, Baiba Onkel, CFO and board member of Storent Holding. They are joined by Christian Janver, representing investment banking at Signet Bank, who acts as a lead arranger of the bond program. Over to you.
Hello.
Hello, everyone. So we will start with executive summary. So Storent Holding is equipment rental company operating in 5 countries. Last year, our sales were 47 million and EBITDA 13.3 million. We are 100% Latvian capital company. Our depots are located around Baltic and Nordic countries, and we operate in 30 rental depots. We have an excellent expert team of 250 people, and we differ from other rental company because we are leader in rental process online and digitalization. Right now, we have public bond offering with total program size 50 million and a first tranche up to 35 million. Our bonds are offered 10% coupon rate and period is 3.5 years. Subscription period is until 17th of April, 12 o'clock. And proceeds will be used to exchange existing programs and to develop the business in existing countries and also in the new market. So Storent currently are 17-year-old company. We were established in April 2008. We started in Latvia. And after a few months, the financial crisis hit, but that made us stronger, and we continued with active sales and also implemented split rent model. So in 3 years, we became top 3 player in the Baltic countries. The next growth period started in 2016 when we bought the rental company in Finland. And in 2017, we opened a subsidiary in Sweden, and we also started our journey in the capital market by issuing the bonds. The first bond program helped us to buy our competitor in Latvia, Cramo, so that helped to grow the company further. So in 2022 happened owner changes, and that allowed Storent to continue the growth story. We continue to issue the bonds and invest in equipment.
Hello one more time. It's nice to see again our investors and the people who is interesting to find out something about the Storent. As a owner of the company, of course, we should define our mission, vision, and mission. Our mission, we are redefining rental industry through the innovation and expertise. Our team of rental equipment specialists deliver cutting-edge solutions to maximize our customers' efficiency, flexibility, and sustainability. Of course, our vision to be the most innovative rental company in the world. And very important in our company, as any private persons, we are, as a company, we have our values. And based on these values, we are try to organize our developments, our business, and it's very important also internally for our company, for our employees, and also it's very important for our customers. Our values: we be in charge, seek knowledge, keep moving, enjoy the rides, and we try to communicate all these values with our customers and our employees. Today's holding structure is following. Me personally, Andris Paulos, and my best friend Seri Esta, we are owners of Storent Holding, 50-50%. We have operating companies in 5 countries: Latvia, Lithuania, Estonia, Finland, Sweden. Bonds will issuing Storent Holding. It's very important to understand this is not a local company, operating company of Storent SIA or any other operating company. I've been working for rental industry since 2001. Actually, 24 years I'm working in rental industry. My partner and my best friend Seri Este, he had been involved in Storent operations from 2011 as a supervisory board member, and both of us, it's probably also good to know, we are graduated from Riga Business School. In 2005, we both had EMBA degree, Executive Master Business Administration degree. Our plan for this year to change the structure, we would like to establish a sub-holding like Storent Baltic, Storent Nordic, and Storent USA, because we have plans to go to USA market. This is necessary for us because we would like to develop entrepreneur culture in every region. We would like to decentralize decision making. It's very important. If our group will grow, we need to give more independency to our country regional management team in a specific region. We would like that companies, sub-holdings will be responsible for own profit and loss statement and cash flow. Actually, what we would like to get, we would like to increase independency, we would like to increase level of responsibilities, and we would like to implement option plan for regional management team. Actually, all these regional sub-holding will have CEO, and they will have executive board, which will include a salesperson, technical person, financial persons, and country managers from this region.
So our operation are supervised by excellent supervisory board member. So chairman is Michal Zavatskis. He is working in Storent Group as a sales and customer service team development manager. He has excellent experience in active sales and processes. So deputy chairman is Ari Esta, who owns 50% of Storent, and we have independent supervisory board member Daiga Uziņa-Melnauksne. She has excellent experience in the capital market in the Baltics. So management board consists of me and Andris. We work together more than 20 years. Our background is financial, but we are in rental industry more than 20 years. So have developed the Storent business, and we know very well the industry as well. Our management team consists of 2 parts. One is headquarters based in Riga, Latvia, and there we have excellent experts from many divisions, starting purchasing, technical, finance, HR, and etc. And in country level, we have country management teams who knows the best local market, who knows the rental industry in their country, and who manage the team. So many functions are organized in the group level, and group supports and helps countries to develop the rental business. So overview of the operations.
Storent stays on three main pillars. First of all, of course, this is the people. We have very experienced team, average experience in rental industry around 10 years. In management team, it's more than 15 years. We know rental business very well. We changed a lot of during the last 2 years, and we implemented high performance culture. Actually, how it works, people who is working hard, from my understanding, should get higher salaries, and actually we have much higher. I think we have the highest salary in industry for people who is working very good. We have, let's say, we are calling this superstar program, and these our superstars. It's very important part of Storent high performance culture. Of course, we need equipment because our customers, construction companies, industrial companies, military companies, who helps to military industry actually, and of course we need to have new equipment. We need to have equipment in good conditions, good brands, and we have 25 product groups, and we have fleet approximately 140 million euro with which we are operating. 113 millions, it's our own fleet. As a difference, it's split rent third parties equipment which we are re-renting. Of course, last year, for example, we have invested approximately 24 millions. We have sold in acquisition value around 10 millions. Our fleet increased by 15%. But of course, our liabilities increase immediately mainly at the end of last year, Q3, Q4, when we will get all our equipment. But results from this equipment will come during 2025, and will be significant, and this significantly increase our EBITDA. And what is most important part also for us, this is the technologies, and we are investing in technology from day one. And we are leader in innovation and digitalization online sales. Actually, we are working in two directions. One direction, it's increasing efficiency of our internal business process. Actually, what we are doing, we are adjusting our technology, our IT systems to our business process, no vice versa. And actually, we are trying to change way how we communicate with our people. Good example, probably what we are doing in rental business, actually what companies like Bolt, Uber did in taxi industry, Booking.com did in hotel industry. We working in very conservative industry, but we are trying to change habits of our customers and the way how we are working internally.
So actually, how we are doing business, as Andrus mentioned, our one of the pillars are the equipment. So in rental business, everything starts with equipment, choosing the right type of equipment, choosing the right producers, and ordering equipment. Equipment delivery can take from 1 month up to 1 year or even more. Then when equipment comes, of course, we finance it and prepare. This means that do calibration and do all necessary checkups. Then we train the team so they can explain also the customers' functions and technical details of the equipment. And of course, we also do marketing and make educational videos for our customers, what actually you can do with our equipment. And then there is a smaller cycle of the rental process. We have quite short-term rental. On average, it's 3 days. So in In last year, we did 87,000 rental operations. So we monitor our customers from different industries. So we are doing active sales. It starts with the project pipelines. Then we, of course, visit also the customers, prepare quotations, and do reservation for equipment. And of course, deliver equipment as well, and sell other services on top of the rental. And when equipment returns, then we do the technical checkup, clean equipment, and prepare for the next rental deals. So 87,000 deals happen during one calendar year. And when equipment is getting older and we see that it's not economically beneficial for us to keep, then we prepare it for the selling or to the auctions, or the most worn out equipment we just dispose.
I would like to add that we have 12,000 active customers, and our average rental period is approximately 3 to 4 days. We have to work hard, and we have a lot of transactions to generate our income.
So the geographical summary. In the Baltic, we operate like a general rental company. That's why this means wide range of the products and wide geographical coverage. So in total in the Baltic, we have 21 rental depot. So Latvia is the leading company in the Storent group, generating 39% of the rental income from Storent group. Then in Baltic is followed Lithuania with 21 and Estonia 13%. In Nordic countries, we operate as a specialist, offering access equipment, crane services, and telescopic handlers. In Finland, we have 4 rental depots, and in Sweden, we have 1. Market share. So Storent is a top 3 player in the Baltic market, but looking to the countries, in Latvia, we are number 1 with 19% of the market share. In Lithuania, the market is more diversified, so we are number 5, and in Estonia, number 3. In Nordic, we have very small market share, but this means also we have possibilities to grow there. So about the fleet, as we mentioned already, we operate with a fleet in worth of 113 million euros. That's our own fleet, and we purchase from world's leading manufacturers, where we can make sure that equipment is in good quality and our customers are satisfied. On top, we also split rent equipment, which is an additional part of our income. The 3 main income groups are aerial lifts, working platforms, earth-moving equipment, and telescopic handlers. Equipment rental market in the Baltic has stable growth rate. Last year it was 4%. This year it's estimated to be 7%, and the total equipment rental market in the Baltic is around €500 million. So we offer our services mostly to construction industries, but also the other industries. Road infrastructure, recently military sector is very well developed. Also manufacturing, farming, we have scaffoldings for renovation. Recently, the energy sector is very well developed, and also entertainment business. We are number 1 in the generator product group.
What makes Storent the most innovative rental company? As I said before, we are working in very conservative industry. We have our service. This is we are renting equipment to our customers. We still need to rent equipment, and because customers need equipment to get on the job sites and to work with this equipment. But the way how we organize this internally, and how we communicate with our customers. This is the processes which we are redefining and making new standards in the industry. Actually, all business processes internal business processes, sales management, customer service management, technical department, financial management, everything automated. And it's very important because this helps us to increase efficiency. What does it mean for us? We can get higher sales per higher revenue per one employee. In 2020, we have approximately 290 employees, and we had sales 42 million. Last year, in 2024, we had 47 million euro revenue, but we had 250 employees. You can see that increasing efficiency in internal processes helps us to decrease the number of employees and significantly increase revenue per one employee. Second part, this is of course how we communicate with our customers. Last year, in 2024, we changed all our IT systems, all our back office systems. We implemented intelligence rental management systems. We have new accountant systems, actually all our new systems working in cloud. And what actually gives us? This gives us opportunity to go to any market and very quickly to implement new solutions in any new markets. We need to make very small adjustments for some specific things in different markets. We had experience already in Finland and Sweden, and we are working to adjust our IT systems to US market already. What actually we are doing differently than our competitors? We are selling online a lot. In 2023, before we changed the old systems, we had online sales in Latvia more than 50% from our sales. And of course, we have active sales. We have sales rep who is going to the customer sites, offering our service, but we are trying to educate our customers to order online. Just a couple of days ago, we launched new web page which will help us even better give this service to the customers. Actually, I think we only one company which is able today to send some links for our customers, which is goes directly to their basket already with prepared quotation. Actually, how it's working. A lot of our customers need consultations before ordering equipment. And actually, we created some online-offline mix when customers calling to our salespeople and try to order some equipment, try to understand what the equipment they need. Our salespeople can, during the discussions, make quotations, send these quotations to the specific customers, and customers can finish these reservations through using our application, our web, just putting job site address, maybe putting do they need or not insurance, some attachments, and actually in some 20-30 seconds, actually less than 1 minute, they can make already reservations for specific equipment which they will need. In the future, we also testing the systems when instead of our real persons who is our salespeople or customer service people, in the future we will utilize artificial intelligence, which actually will talk with our customers. It's already possible using English language and make a quotation for the customers during these discussions and send automatically to our customers. Actually, to summarize, we only one company which I know in the world at this point of time, in which you can make order, you can sign agreement, you can deliver, you can get equipment, sign delivery notes, order return of equipment, get invoices and paid, and you can do everything remotely. You don't need to come to our office. You don't need to call. You don't need to send emails. Actually, everything you can do online remotely. Of course, the number of people who is ready to use this technology increasing every day. At this point of time, for example, in United States market, it's approximately 15 to 20% employees from construction company are ready already to make online orders.
Okay, and then we move to financial overview. Anyway, the full presentation is available in our webpage, so you will be able to find out the numbers, more detailed numbers there, and of course in prospectus. But in very short, I will guide you through our financials.
Of course, you can send the questions to our emails, and we are ready to answer any questions, all our potential investors.
So from our investments, we did good increase in revenue last year, 7% growth. So our sales were 47 million. We have stable EBITDA, but of course we expected it to grow because of investment effect, which will comes later. So our assets are 123 millions. And on the equity side, so 47% is the equity ratio.
I would like to add that you should take in account that all investments which we have made in 2024, the results will come in 2025, because we just start to receive equipment starting from the May, June last year, but liability increasing immediately in 2024, but EBITDA will increase in 2025.
So yes, the net leverage increased because of the investments in the rental fleet. So total sales. So main part of our sales are from rental deals, and the most important from rent of our own equipment. And this part of rental is most profitable. On top, we are re-renting split rent equipment. This is third-party equipment where we share the income, and it allows us to serve more customers with different type of equipment. On top, we are selling also the services like transportation, assembling, disassembling, and also selling some additional materials for customer convenience. So last year, EBITDA bridge. In 2003, we had EBITDA 5.5 million. So we increased in revenue 2.6 million, and in addition 0.6 million from the other operating income. We increased also in the cost side, so materials and services that were 0.74 million. We had last year significant increase in personnel costs. It was due to delayed inflation effect, and also we changed our remuneration system, implementing the star programs and high performance culture. So we expect that personnel costs will increase in much smaller amount this year and next year. As Anders explained, we are working very much on efficiency. So in this year, this is our main priority to increase profitability and
we connected almost all our employees' salary to the final results. And actually, if we will have increase in our sales, we will have increase in our salaries. If we will not have increase in our sales, we will not have increase in our salaries. Actually, this is what means high performance culture for us.
Mm-hmm. And of course, as a result of investments, depreciation increased and also interest, and that's mainly also the bondholders and also leasing interest increased because we invested more.
But we are looking on interest which we are paying for bonds. It's like a profit sharing with our partners. That's why we are issuing bonds. Bonds help us to grow our business, to grow our EBITDA, and of course, bondholders need to get the profit from investment in the company.
And the positive effect of the large investment is expected to reflect in profitability in this year, and that we see also in the first quarter in the revenue growth. So here a little bit more detailed about the rental fleet. So we started with 9 million in acquisition. At the end of 2024, we had 130 million. As Andres explained, we invested to renew our fleet and also to expand our fleet. So both directions. Right now, 32% of our fleet is newer than 2 years. So we managed to renew our fleet, and that, of course, is competitive advantage if we look at our customer side. So proportion of our fixed assets. Our rental fixed assets are almost 92 million, and the largest part, almost 52 million, are fixed assets owned by Storent. So this means that we have bought fully out. They are not in leasings and not pledged anywhere else. So another 40% is right to use assets. So actually this is rental fleet, which is leased from the producers or leasing companies. And our liabilities are total 55 million. So 25 are the existing bond programs, and 27 is the leasings, and a small part of other borrowings. So for the new bond program, we offer the 2 covenants. One is the net debt EBITDA ratio. So we offer right now 4.5, which is our industry benchmark. Our industry is very capital intense, and if we look at the biggest competitors, the net debt EBITDA ratio is from 4 to 5. So we choose.
If we are looking on the first biggest rental companies, for example, Loxams and Boyles, they have EBITDA in this range from 5 to 4.
Yes, and another covenant is equity ratio, which is 30%. Right now, at the end of 2024, we have 47%. So quite good range, quite good situation right now, and benchmark level also for the covenants.
Yes, about the US market, we have signed a letter of intent with potential target in Texas state. I personally visit this company. They have 2 outlets, very good condition equipment, 3 years average age of the equipment. We are going, we have plans. Of course, this is the subject to due diligence. Due diligence is already started. This is subject to due diligence, but we are planning to buy 70% of this company. We would like to keep existing owners. They are 2 owners. They will keep 50, each of them will keep 15%. And actually, from our understanding and their understanding, we have very good synergies. They know local markets, they know local customers, and we can bring new technologies which can bring additional customers, additional sales. And this company didn't have almost didn't have the liabilities. It's very small. Net debt, it's 500,000. And if we are looking on Storent results and USA target results for 2024 and combine these results, company would have 60 million euro sales, almost 21 million EBITDA, and liabilities around 56 million. We are going to issue bonds in the amount of 35 million. We expecting that 10 million will be replacement of existing bonds program. And we think that liabilities will increase on 25 million euros. But in this and you can see that if we just add liabilities, 25 millions, it gives us liability around 82 millions. It's a 3.8 times EBITDA. But this is without expecting growth in sales and EBITDA. For Storent, for example, in a Q1, we had growth more than 20% for our own equipment. Actually, we had very, very good results in Q1 in 2025. And the company in United States, they also expecting to get growth this year, 10 to 15 million euros. Yes, if we will join both these companies without any increase in sales and EBITDA, it gives 3.7 net debt to EBITDA and 43% equity.
Yes, and now we are coming to our bond offering. First, I would like to tell that we are Storent and we are very experienced in the capital markets. So we are issued our first bonds in 2017 with 100 investors, and we have repaid already 2 bond programs. And last 2 programs we issued in the retail market, and total amount is 25 million. And as we see, they are also traded in the Nasdaq Baltic. So and currently we have around 2,500 investors. So we are very appreciated that bondholders find our business attractive. And now I give word to Kristiāna Janvare from Signet Bank to tell more about the bond offering.
Thank you, Baiba. Hello, everyone. Obviously, you can read the full terms and conditions in the base prospectus and the final terms, but I'll try to talk about the key points to pay attention to. The issuer is Storent Holding, the holding company of the group. And similarly to the previous bonds and the existing bonds, this is an unsecured bond offer, but the bonds have corporate guarantees from the material subsidiaries of the group. Storent SIA, which is the Latvian subsidiary holding most of the group's rental fleet, and the Lithuanian subsidiary Storent UAB. And also the prospectus actually has a clause that in case material subsidiaries are added to the group, for example, through an acquisition, then these should also be included in the list of guarantors. The program size is up to 50 million euros and the first tranche is up to 35. And the nominal amount, which is also the minimum investment amount, similar to the previous public offers, is 100 euros. And this also applies to the exchange offer. The offer has an exchange component. The company is offering the existing investors the opportunity to exchange their old bonds into the new ones. And for that, the investors will receive a rollover premium. 1% for the investors who hold the bonds maturing this year, and 0.5% for those investors who hold the bonds maturing next year. The bonds have a 10% interest rate or coupon rate that will be paid on a quarterly basis, starting from 3 months after the issue date, which is the 25th of July. So the first interest payment is expected that day. And the maturity is 3.5 years. And the bonds will be redeemed on maturity. There are no call options included, which means that the issuer has no right to redeem the bonds early. And there are, of course, financial covenants and undertakings included in the structure. Baiba already presented the financial covenants, but in addition to that, the issuer also has several undertakings or say promises that it has made to the investors, which include, for example, no change of control, meaning that existing shareholders should maintain control over the group, which also includes limitations on dividend payments, limitations on asset sale or sale of substantial subsidiaries, reporting requirements. The issuer will continue to provide regular reports to the investors, and also listing on the regulated market. And the company plans to list the bonds on the Nasdaq Baltic bond list shortly after the issue date. And Signet Bank is the lead arranger for the bond offering, and we also have a team of distribution partners in Estonia, Lithuania, have LHV Bank, Redgate Capital, and Charlo Bankas. So if you have any questions regarding the bond offering, feel free to approach either the company or any of the organizers. Can we move on to the next slide, please? Just a few words to summarize the use of proceeds from this offering. So basically, the use of proceeds is in three directions, as already explained by the management. One is possible future acquisitions, as Andris already told. The second direction is general corporate purposes, which basically implies new investments in the rental fleet. And the third is the redemption of the existing bonds, and that will be achieved firstly through offering the exchange offer option to the existing investors, and also any remaining proceeds from this tranche will be directed to the redemption of the existing bonds on their maturity dates. And also just to add that, you know, in case any of the M&A plans do not materialize, the company plans to use the remaining proceeds from this offer towards the redemption of the bonds. Regarding the subscription process, for those who are already investors, you already have the experience, but basically the first step is always that if you are contemplating investing in the bonds, you have to have an investment account or a financial instrument account in either a Baltic bank or a brokerage company. So if you don't have any, then that would be the first step you should work on. And usually the fastest way is when you approach the bank where you already have a current account. The next step after you have made your investment decision is to place the order, and the way how you place the subscription order, of course, depends on each of the bank's policy. Normally, for the large retail banks, it would be through the internet bank, but it can be also over the phone for some of the banks. And the company has actually compiled a list of detailed instructions on their webpage. But obviously, if you have technical questions, you can always also consult with your bank. A few words on the allocation, how the orders will be allocated. So firstly, a preference will be given to the existing investors. And this means that those investors who participate in the exchange offer will have the bonds allocated fully. So we'll have 100% allocation. And the remaining bonds will be then divided among the new investors. And in case of oversubscription, then preference will be given to the investors who place their orders early. And then, so after the investor has placed the order, on the issue date, the investor will receive the bonds on the investment account. And similarly, also with regards to the exchange process, so if you hold the bonds already, then you should have received some sort of notification from your existing bank where you hold the bonds regarding this exchange offer, and also including the information how you can place the exchange instruction. If you haven't received any, then you can contact your bank and really ask about this case. And then if you place the exchange instruction, then on the issue date, you would receive the new bonds on your account, while the old bonds would be deleted from your account. So that's briefly about the subscription process, but in any case, if you have any questions, then please just contact the company, us, or your own bank. So I'm handing over to Andris and Vaiva.
Yes, thank you.
Yes, thank you. So then we are.
We've got some questions. Thank you for your questions. First questions I already mentioned. What are the current sales trends? Can you compare sales Q1 2025 versus Q1 2024? Total rental income in Q1 increased approximately around 15%, but for our own equipment, around 20%. Actually, we have very good results in Q1 in comparison with 2024. Second question, how comes the Latvian equipment rental market is so much smaller than the Lithuanian? This is because of the size of construction industry. This is because of the size of populations. We are smaller in Latvia in terms of construction, size of construction market and population. What do you think you will succeed in US market according to the fact that your market share in Sweden and Finland is quite small? Yes, we are sure that in your US market we will succeed because we are going to buy 70%. Not 100% existing owner will continue with us to develop the company in USA. We have common vision, we have common, let's say, values, and we, I think, we have good synergy. In general, you should understand the US market. This is the biggest market of the world. 60% of the whole rental in market, it's only United States. The growth last year was more than 8%. It's already $75 billion and then growing significantly. We are going in Texas. Texas, it's a huge economy. Actually, Texas, if it would be a separate country, it will be, I think, number 5 or 6 in the top economies in the world. And of course, we took in account our experience in Finland and Sweden. We had in Finland, when we bought the company, we bought 100% company. At that time, previous owners actually left in 1 year and established the same company close to the our. Of course, we went to the court after that in 3-4 years, but actually it took some time. Actually, in Finland, we start from greenfield, and we won the court. We get some money from previous owners, but of course, we took this negative experience and we tried to find the company which actually and owners of this company which is ready to develop company together and go together in the future. This is very important that we have the similar vision, the similar values, and we have huge synergy between us and the guys in United States. You have high interest expenses which have huge impact on PL results. Actually, I'm looking a little bit different on interest payments to bondholders. As I said, it's in line of interest, of course, but I'm looking as a profit sharing between partners. I consider our bondholders as our partners, as our, let's say, part of our owner structure, who helping us to develop the business. Of course, we are working to increase revenue and profitability. We think with acquisition in United States and with the plans which we have and results which we have in Q1 in other countries, we will increase our profitability. But at the moment, we are focusing on increasing company value. Actually, we are trying to increase sales. We are trying to increase EBITDA, and we will try to increase our equity value. As I said already a couple of times, our future plans probably in 3 to 5 years to make IPO. And of course, some part of our bonds will be probably in the future replaced by shares. This is idea which we have as owners of Storent. Fluctuate significantly by the time of last year is a chance that...
Read.
Please.
So bond value has been influenced significantly by the time of last year. Is there a chance that when term ends, you actually end in minuses because bond value in the market has fallen a lot?
According to our program, Signet probably could help us. We need to pay full amount, which we actually borrowed, and we did already in previous programs. We closed already 2 programs.
Yeah, I'm not sure. Maybe just to add from my side to this question, it's a bit hard to understand how it was meant exactly. But from the investor's perspective, if you invest during the initial offer in the bonds at, let's say, a price of 100, and the company repays the bonds at the maturity, then you receive 100% of the nominal value back and interest in between. And then what happens to the price of these bonds on the secondary market? It doesn't really affect you unless you plan to sell the bonds in between. So that's just a comment on the technical side.
And there is another question: how you will fix foreign exchange risk if you will go to US, if I understand correctly?
Yes. I think today the rate goes to preferable way, actually. And of course, it's important for us on a M&A, actually on a closing of the deal. Now, as I said, we start process of due diligence, and we have plans to make closing till the end of summer latest. But probably if we will succeed, it could be already at the end of June. But today the rate actually going the directions which is good for us. And in the future, we have plans to get financing for this company, because this company does not have any liabilities, and actually we have plans for capex to raise this financing in United States, actually. I don't see big risk at the beginning in terms of rate.
Thank you. There are also questions that we have received prior to the call, so let's continue with those. Is the income tax already paid, or must I pay it?
So it depends on the bondholder residence. So we don't withhold any income tax from non-residents. So Lithuanians and Estonians should handle their taxes themselves. And in Latvia, we withhold income taxes only for those who does not have investment accounts.
Thank you. Can you explain in more detail how will the process of exchanging existing bonds that mature in 2025 and 26 to the new ones be organized?
Maybe I can cover this. As I actually said, this process of how you can place these exchange instructions depends on the bank where you actually hold the bonds. For some of the larger banks, you can place these instructions in internet bank. Usually you have to look under corporate actions. So either you would have an announcement under the corporate actions, or you should have received some sort of notification from the bank regarding this. If you have any questions related how you can place these instructions, then please contact your bank and they will help out with that.
Thank you. There's also a question on the US market. So why specifically USA market has been chosen for business expansion?
Yeah, we investigated different markets. We investigated different opportunities. We wanted also to buy some companies in Finland and Sweden, but I said already many times it's difficult to find a good company with a good price, because if the market going down, people don't want to sell with real market price the companies. But when the market going on the top, they actually saying, okay, now it's very good market and we will stay and wait. We had some target, but the prices were not reasonable. Second one, it's a cultural difference, taking account also Finland, Sweden, Baltic market. Even in the Baltic, we have between Latvia, Lithuania, maybe less, but maybe between Estonia and Latvia, we have bigger cultural difference. And we would like to choose the biggest market, as of course it's USA, with the biggest potential growth. This is USA market with higher profitability. Today, payback in United States, it's calling dollar utilization. It's almost two times higher than in the Baltic countries. If we are buying, for example, an excavator for 100,000, usually we can get in our region between 25 to 35,000, which is 25 to 35%, depends on the country. In USA, it's between 40 to 55, actually, lowest range. In some states like Texas, it's even higher, close to 50%. And yes, and the biggest market and one culture, one language, which helps a lot to grow significantly and utilize also our IT knowledge and IT know-how.
Thank you. Why this time Storent offers unsecured bonds? In the both previous offerings, secured bonds were issued.
So that's actually not true. So our previous bonds are also unsecured, but they are guaranteed. So in previous bonds, we have guarantee from Storent SIA, which is the main holder of the assets of Storent Group. And this time we added the Storent Lithuania subsidiary as a guarantor, who is the second largest in our group.
Thank you. Does the 1% bonus apply for the whole 3.5-year period? Meaning, will it be an annual bonus?
So it's one-time exchange fee, taking in account that existing program due this year has 11% annual interest rate, and new bonds are with 10%.
Thank you. Continuing with the questions, there are a couple of them about the 2024 report. Are rights use assets 40 million euros, 100% Storent-owned assets?
No, they are not. As I explained, it's mostly leased by the banks and producers. So against these 40 millions are around 30 million debt.
Thank you. Could you explain what is included under other operating expenses, 6.28 million?
So there are different kind of expenses. Firstly, it's facilities expenses. Storent does not own itself any facilities, so then it comes on top marketing, insurance, IT expenses.
But IT, it's not a capex, it's
Like
expenses.
operating
It's
expenses.
operating expenses.
Do you think in coming years amortization 8 million euros will increase or decrease?
So in upcoming years, it will increase, but actually amortization increase or decrease is very proportional to rental fleet increase or decrease. So in upcoming year, we expect that fleet will increase. So
if we invest this year, we have planned to invest in equipment. Definitely, it will increase. Of course, we have some fixed assets which stop to amortize, but we try to renew the fleet and we try to the average age of our fleet to reach at least will be some 5 to 4 years. This is the best average age for rental company.
Mhm. Aren't bank loans much cheaper than bonds?
Yeah, they are cheaper, but of course
they are limited.
they are limited because we, as I mentioned already many times, in Baltic banks, it is not possible to get financing, for example, for small equipment, which have much higher payback level. For example, I don't know, drill, aluminium tower, vibra blades. It's not possible to get financing from the banks for this equipment. We can get financing from the bank only for big machines like excavators, skid steers, backhoe loaders, big cranes in Finland, for example. Yes, a big access platform and boom lifts, but it's absolutely not possible to get for small equipment in which we also need to invest a lot to get higher profitability.
Mhm. Can you give any guidance for financial year 2025 and 26 revenue EBITDA?
Actually, as we put on our slide in presentations, you can see how our profit and loss statements could look, equity level, debt level could look after the bonds. And we are planning to increase our sales approximately 10 to 15% in 2025. And EBITDA, we are planning to increase between 15, it was correctly 15 to
25, yeah.
15 to 25.
Do you have any plans to pay dividends in any year till 2028?
Pardon me?
Do you have any plans to pay dividends in any year up to 2028?
We at the moment, we like owners had debt to the company. Probably this is only this debt will be covered by dividends. Only this what we are planning to pay. This is actually in more detailed informations you can find in our prospectus. We have limitations of dividends payments. This is we would like to cover previous debt, which we have to the Storent Group. This money we have used to pay previous partner to buy out the shares of the Storent. And after that, we have limitations to pay the dividends.
Half million per year net amount of dividends.
Yeah, this is the maximum. But yes, our target as owners not to pay dividends, but develop the company. Of course, we are using some dividends as a salary payments for owners, but as like a part of our salary. But in general, all profit we would like to keep in the company for future development, for future growth of equity, because we, as I said, we have plans in 3 to 5 years to go to IPO.
Mhm.
But to go to IPO, we need to increase our equity value. And now using the bonds money, actually, we are trying to increase the equity value of the company.
Can you please comment why 2026 maturity bonds have only 0.5% instead of 1%?
Because we try to cover difference for people. Could you explain?
Well, yeah.
But,
So for the bonds matured this year, we have 1% exchange fee, which is the difference between the coupon rate 11 and 10, so 1% difference, but actually you get it for the 8 months 1%. And for the bonds due next year, we added just 0.5% motivational fee for exchange. So
because the rate's the same, 10%.
there are no difference between coupon rate.
Yes, we try to cover difference in coupon rates. That's why in 2025, for 2025 bonds, it's higher. Because 2025 bonds has coupon rate 11.
Continuing about the US market, do you have a resilience plan for the latest news that came from USA? So in regards to trade war, taxes, and overall geopolitical situation.
You know, I have personal contact with the owners of the company which we have planned to buy, and from actually US from the inside the country the situations looks absolutely different. They are very optimistic and they are very actually happy with the situation, and they see a lot of possibility to grow. And actually how we see this situation and how the Americans see these situations, it's probably absolutely different. And also, I think we have to focus on the things which we can change. We cannot change government in USA. We cannot change situation what's happened today, but definitely we can look on our businesses. We can look how we can work more efficiently, and it's also interesting for our future partners in United States to combine this our knowledge and their local experience to grow and to boost the sales of this company. Actually, situations looks from inside the company a little bit different than it looks how it looks for us actually.
Our next question is consisting of two parts. What's the basis for pricing at 10%, and what is the level of secondary debt pricing for your peers?
So we put the 10% coupon rate as we expect that this is the market level, and of course we consulted also with our financial advisors. It's hard for me to answer the second question, so we haven't analyzed it so much, but I understand it's plus minus 1%. It's on the secondary market. Yeah,
secondary market. Actually,
no big fluctuations.
We are not following this, but as we know, there is no big fluctuation.
Yeah, maybe I can add a
Yeah,
bit. Also, the pricing of these bonds were partially, it was also based on the levels where the existing bonds are trading, and they are trading close to par at the moment.
Let's take seemingly the final question that we have. US expansion looks part of your equity story, but not so attractive from debt creditors' perspective, who do not take part in equity upside, but will assume all the excessive risks. So the question is, why not equity financing?
This is a question to me. And as I said, if we are going and would like to raise some equity money, At this point of time, we should lose significant part of our company as owners. Number one, I will be absolutely honest with this, and this is not probably the biggest problem for me, but the biggest problem for me to find some investors who is really owners of this money, because we had experience previously with some venture capital funds. And actually, in some point of time, it went absolutely very nice. We had so huge growth, but at some point when venture capital funds decided to exit, it's actually stopped to developing of our company almost for 5 years, and we cannot do anything almost for 5 years because previous financial investors cannot exit and cannot find the way how to exit. Until we found some way how they could exit, we again start to develop the company. First of all, it's we don't want to lose at this point of time some significant part of equity. Second one, we would like to go to IPO, and we would like to keep power to make decision in a company. This is most important for me. At this point of time, we are ready to pay higher interest rate than probably just to buy equipment, and probably for equity money we don't need to pay any interest payments. Yes, and but at this stage we are not ready to see close to us some partners which will not share our vision of development of the company. This is the way how we can keep our independency, me and Terry, and develop the company how we see. And this is very important for us.
Thank you. We also have a comment from the investor. Thanks for honest answer. On this note,
I am trying to be honest with everybody. Nothing to hide. It's clear to everybody who a little bit understand about some financial figures.
So on this note, we're about to close the call, but before we're doing that, I'm handing over to the management for the closing remarks.
So thank you everyone who participated in this webinar. Again, I encourage you to read more and find out more about the bond offer in our webpage, storentholding.com. And final words for Andrus.
Yes, I would like to say big thanks to all existing investors who already bought our bonds. As I said previously, I look on you like partners. I look on you like my partners who is helping me develop the company. I am looking on the interest payments which we are paying to bondholders like a profit sharings. And of course, as I answered previously, for us it's very important that people invest in our bonds, because we can develop the company according to our strategy, our visions, what we would like to do. But believe me, we have visions, we know what to do, and we know where to go and why to go to bring and earn money for our bondholders, for our investors, and also for the company. We're looking very optimistic in our future, and we believe that we will raise necessary amount to continue developing our company in the Baltic countries, Finland, Sweden, and of course entering US market, because actually this is our target for this year. We want to go this market, and we would like to, let's say, start to work in US market. This will be very significant big step for Storent. Thank you very much to all investors, and thank you very much for your time and participation.